Hello, my name's Simon Mather. I'm the Chief Investment Officer for BUSSQ Building Super. The impact of the coronavirus, Covid-19, outbreak on investment markets has led to a significant level of global uncertainty, with share market volatility at high levels experienced both here but also overseas. Like all superannuation funds, this has meant that BUSSQ has experienced some short-term negative returns over this recent period. We're now entering the fourth week of this period of uncertainty. In the first week, we saw share markets across the world fall by between 10 to 15%. Over the same period, in comparison, our default investment option, the balanced growth option, declined by 3.69%. This relationship between the performance of share markets and our diversified balanced growth option is important for members to understand. Not all money is invested in shares. We've diversified this across a number of other assets, including property, infrastructure, agriculture, cash, and fixed interest. And also our use of active management means we are closely following this situation daily and able to act where suitable. BUSSQ is doing everything it can to work with investment managers to ensure it manages the situation appropriately. For some time, BUSSQ has been concerned about valuations, and as such we have had in place a strategy which acts a bit like an insurance policy that protects some of the portfolio against sharp negative movements. These do not remove all of the movement, but act to soften the impact to our members. We understand that no one likes seeing their hard-earned superannuation decrease in value, and times like this we're seeing people are very nervous, and for some of our members, especially those in or near retirement. We have long advocated that you invest for the purpose of these funds, but often the hardest part in all of this is that there is no right or wrong answers. If you are younger and not looking at retiring for another 5 years or more, then our message is simple: please do not panic. However, we understand that this is easier said than done. Switching to a safe investment option like cash will only lock in the losses occurred already and may place you in a position when the market recovers and rises again that you miss out on that market recovery. Also, cash returns in the future will likely be very poor, as interest rates in Australia but also globally have fallen dramatically. In fact, it is possible that your money would be going backwards as it doesn't keep up with inflation. Also understand that every time your fund receives a contribution, you're actually buying these investments at a lower price. If you are nearing retirement, we know that most of our members will use their superannuation to create a long-term income stream to support their retirement. These members may wish to review their allocation to ensure it is appropriate, and we're here to help you with these decisions. If you are in retirement, this is a very difficult time. We know large portions of our retired membership have had their income stream set up with a cash allocation that their pension payments are coming from. This is also our default setup for income streams. This setup is specifically designed to ride out times like now, so you're not forced to sell assets that have decreased in value to fund your lifestyle. We suggest that you talk to one of our experts and are committed to being available to members to have these conversations. What we do know is that at present, investment markets are reacting wildly to news and the current events, and are likely to do so whilst this all plays out. We are seeing some significant daily movements, both positive and also negative. In the last 2 weeks, for instance, we have seen some of the worst days since the GFC, coupled right beside some of the biggest and best trading days since the GFC. For instance, take last Friday, the 13th. In Australian markets, as an example, the day started down and fell around 8% by lunchtime. By the end of that trading day, the market was up 4%. And then following on from there, the US was also well up on Friday night as well. During these challenging times, we will continue to actively manage our members' retirement savings. This will include looking for opportunities when appropriate when markets fall. We will continue to maintain a diversified portfolio of investments, including unlisted assets such as property and infrastructure, which have provided some protection against volatility in global markets.